Hey, welcome back to my channel. Technical analysis for stocks, crypto, ETFs, commodities, whatever you want. Send me an email with a ticker. I'll mark it up, post you a video, and help you with the timing for your ins and outs for your investments. I'm not doing your fundamental research for you. You do that on your own. I'm just going to help you with the timing. That's all I want to do. What you want to buy is up to you. When you buy it, I can definitely help you with and show you just some where good entry points are, where good exit points are, where to keep your stop losses, what might be happening, and just give you a view of what the charts are saying. And they're giving us more information than the technicals are at times. So both are important. I just want to help with the one side for you. I love looking at things nobody else is looking at. I love the babies that have been thrown out with the bathwater because that's where the cheap assets are. If I was in my 20s or 30s and I had, a portfolio going, I would take a small percentage of that and start to look at some of these advanced medical technology companies. They were very popular, very hyped just before COVID, coming out of COVID, sorry, not before, just coming out of COVID. And then, of course, they got the big sell-off because they weren't worth what they were valued at. And now everyone's talking about chips and AI and oil, and commodities are making the news. Nobody is looking at or talking about these medical technology companies, advanced medical technology companies. And I found a couple here that, once again, if you were to put some money in and promise yourself you wouldn't touch it for 5 years, I think you'll end up in a good spot. This medical technology is not going away. There's efficiencies in our healthcare system that have to be improved, and technology is the way to do it. Medical technology is the way to do it. This is going to be the path forward at some point, not right now because everybody's focused on other things, but this will come back. This isn't buggy whips, this isn't hula hoops. This is a definite part of our medical process going forward in the first world. Here's one. So we're on a weekly chart. Each candle's a week. Let me put my other moving average back on. So moving averages, I like on the weekly chart the 34 weekly moving average. I use that a lot. And on the daily, the 200 daily. So the purple's my 200. When I'm on the weekly chart, it's 200 weeks. When I'm on the daily chart, it's 200 days. So I like the 200 daily, the purple one there, and the white one here, the 34 weekly. So this is beam. Now, before I get too far into this is all things I was just looking at charts. I don't know what these companies do. I don't know too much about their fundamentals or anything like that. This would just be something on a technical level. I see something setting up. I see something happening. You can go and do your own fundamental analysis on these. A lot of these companies fundamentally aren't worth looking at, but that doesn't mean they aren't worth looking at. It just means fundamentally they aren't. I think there's good things coming for some of these. So Beam, I don't know what they do. Health, Beam Therapeutics, so biotechnology. There we go. At one point in 2021, street market thought they were worth $134 a share. They're down to 32. You can see here, here's your IPO. Here's your first peak and pullback, and it does seem to be a place where we either launch from, hit and bounce from, hit and fall from. You can see the interactions with it here. That's a big support and resistance zone. It's green lines, so that means we're above it. Green lines are support, red lines are resistance. This is horizontal. Trend line support is diagonals. So you can see we're above this green line again, so that's good. Something to note here too, it's always important. Look at the volume coming in. Like it's bigger, it's more volume coming in now than there was when it was shooting up to 120 from 30. So I like that. More than average volume, great. 34 weekly coming up, it's underneath. Good things happen when the 34 weekly is going up. Look at that. All right, so this is pointed in the right direction. The 200 daily pointed in the right direction. Once again, good things happen when these moving averages are going up. Where would I buy if I were to buy? I would want to see this green support line, horizontal support line. I want to see it get breached by a weekly candle that closes, not just above it, but the whole candle's above it. The open and the close, the high and the close, the high and the low All right, so if we're looking at this candle here, the whole body of this, I want it above. I want it to break this red line here. All right. And then sure, I'll get in for a couple shares, not a couple, but a small percentage of my portfolio, and assume that someday maybe it'll get back to 120, follow this line out. Looks like it would take 5 years. We're into 2031. So I'm fine taking a small bet like that. I wouldn't right now. This could easily turn around. So, this red line is resistance. It doesn't, we look back to clearing this, especially in the recent years, clearing this support. Can't just break through. You've got to clear it. What we want to do is actually clear it. We want to come back and retest. And that would be the perfect spot where that red and green collide. All right, so you've got double support and then take off again. All right, and then start to make your way up. Isn't that a wonderful candle line? Because that's how candles move. They go forward and backwards in time. Jesus Christ, I'm no artist. Anyway, so what am I looking for? I want to see this all get breached to the upside. I would love to see a retest and then resumption. Easy peasy. If that happens, then this green line becomes my path out. That's the trajectory out. If it were to breach this, come up and come on the outside of it, that would be a sell for me. Once we breach this green line, I would not. I can always buy back in, right? Buying and selling is easy. If I wanted a stop loss for here, all right, you buy here. The fearful stop loss, right? You type stop loss would sort of be this green line, maybe minus 10%, right? It's maybe down in here, maybe there if you want to be a little braver, all right? Made a new low after that. Go down to here, but once again, if you hit here, you're breaching this, so that sort of follows that rule. Yeah, keep your stop loss tight. These things can turn around fast. Once again, the fundamentals aren't there. These are speculative buys. Now, $32 stock, I got to believe there's something going on. It's not, like a $3 stock, right? These are a little more speculative. So there might be earnings here or something, but you want a stop loss on these. The other place, here's a good spot too, right there. That's where you put it. All right, so these guys here, look at the interactions here. If you get below that, it turns into resistance. See in here? Had a hard time getting above it. That's my stop loss. If it gets below there, I'm out. So yeah, that's basically the 10% anyway. So there you have it. At some point, if this continues in this pattern, at some point, late summer, early fall, I would probably step in just a small position to see what's what. CRSP, we all know CRSP. They're the Coca-Cola of this pile of soda. Name brand, recognition, and it's genetic. It's I don't know what's coming in the medical world, but I know genetic manipulation will be a part of it. The only thing that sort of holds me back a little bit from this is government regulation that might come in. I don't know how that'll affect things, but somewhere in the world, somebody's going to be playing with genetics, and these guys are at the forefront of it. So once again, here's coming out of COVID, got itself up to 220, a lot overpriced. Fell down, and now we have these falling wedge. We have a falling wedge inside of a falling wedge. And right here, you can see we've broken out of the falling wedge and not just a little poke through. We've got most of the weekly candle coming through. Break out of a falling wedge, that's great. It means the prom is over and it's time to go to the hotel. And we all know what happens there. The other thing to look at with this is look how it moves, all right? You get these chop, chop, chop down, up. Chop, chop, chop down, up. Chop, chop, up. So this is, once again, a violent mover. Looks to me like this downward, here's your falling knife. All right, everything here. We're on the other side of it now. This looks to me like it's bottoming and ready to go again. Once again, will it go back up to 120 by the end of the year? No, but looking 5 years down the road, that doesn't seem unreasonable. $56 stock now, 120. It's a decent investment over 5 years. So what do we want to see? First, we can get rid of this. I don't need to see that. I want to see a weekly candle close, open and close outside of the falling wedge. I don't want this diagonal trend line support to get broken too much. What we might get, once again, same thing, breakout and retest and then go. Fuck, that's beautiful. This might be a little steep. I don't know. If it shoots up like these shoots here, right, then we might get a shootout up, a retest here, and then a resumption. And then that would be great. And in that case, you would have almost two buying opportunities, one on the inside here, under between here and here, and one on the resumption here. As for a stop loss, simple. See the bottom of this wick here. All right, breaks that, goes below that. I would definitely be out. You can always buy it back in, but once again, these are risky. They need a lot of room to be dynamic. You can't put a really tight stop loss on here, or you'll get stopped out for sure. So I'd keep it down here. It's a bit of a 20% loss haircut if you are wrong. However, it could go much worse. So take your lumps, but the risk to reward seems to be higher on the reward side. So you have it, Christopher. At some point, I'm going to want to own this. I'm waiting for it the technical setup to confirm somewhere in here. Looks, once again, by the end of the year. And I'll make a video of moving these if I buy. Intuitive Surgical, this one isn't as risky. This company is more a fundamental play in the med tech. Let me show you some things here. And I'm not here to sell you on fundamentals. Everybody do their own fundamentals. But things I look at. First thing I do is I go to earnings. And I can see earnings are projected to go up. All right, this company makes money. And they make more money than they did the previous year. Revenue going up. Love it. Statistics here. In 2019, 348 million shares were outstanding. Now 354. That's pretty incredible. They haven't had to issue shares to dilute shareholders to make money, all right, or to free up money. They're not diluting you at all right. Matter of fact, in the last 3 years, they've been buying back shares, which is music to my ears. That's wonderful. Price to earnings, 51. Seems rather expensive in a market where what are we in a 18 to 26 kind of range, the average of the S&P or all the indexes right now. But if you look at, it's been 2019 was 51, 92, 77, 72, 67, 81. This is going down, all right? That's incredible. It means as the stock price is going up, they're collecting more money to bring their PDE down. That's what you want to see. This is cheap. You're buying it now at $424 at the same value you could have bought it back. Why is that doing that? Back here in 2019. Oh, sorry. Where's 2019? 2019 when it was at 120 bucks. So it's a well-run company. That's what that's telling me. Now, things I don't look at everything down here. There's too much. This is analysis paralysis for me. So I like return on equity. In the high teens, perfect. And over the last couple of years, going up. All right, 11, 14, 15, 16, 17, going up. That's great. I look at the quick ratio and the current ratio just to find out how much cash the company's got on hand, because it does sort of indicate if they are going to issue more shares. All right, that's how they can raise capital, is to issue shares. Anything above 1 is great. Anything under 1 is not. Means they're having a hard time making their payments. They've got a ton of cash on hand. Debt to equity ratio is 0.0. They might have a little bit of debt, but not enough to actually trigger anything in that ratio. Revenue per share. Look at these numbers going up. Operating cash flow per share going up. Free cash flow per share going up. Yeah, from 3 to 788. Those are the fundamental metrics I go to at a quick scan, like the quick sniff test, and That's impressive. So this isn't a speculative bet. This company makes money. It's going to continue making money. They don't just sell the machines. They sell, there's aftercare, there's maintenance, there's upgrades, there's all sorts of stuff that comes in. So when a hospital buys a Da Vinci surgical machine to do human-free surgery, there's also uh, there's some tacky expenses that come along with it that keep the hospitals paying Intuitive Surgical things like maintenance and upgrades and stuff like that. So they've got a constant cash flow coming in. They don't just sell a machine; they sell a machine plus they maintain the machine. So it's a great little business. Look at this. Flagging here, consolidating 1, 2, 3, 4, 5. That's kind of perfect. I got to assume after 5, it's either going to break down or break up. Don't think it'll do this for too much longer. Hitting our 200 weekly, which seems to be, once again, like a lot of things, a pivot point. Could it come down to here? Yep. Could it come down to here? That would be a bigger crash. It got down to 187. That means something's going on in the markets, and this would be an opportunity to take a bigger position than just a speculative position. If we got down here, up here, if it falls out of this channel, which we don't really want to see the flag here, we would rather go up, but this might be a holding spot for it. You can see it's a rejection spot here, and it's a launching spot. And here you've got the breakout, retest, resumption, consolidation. This, to me, I don't know what's going on with the markets because 50% of this move is just the markets, 30% is the sector, the healthcare sector, 20% is the stock. But getting in, I just want to see this get breached here. Make its way out of here, come back, retest, and take off again. That's my buy spot. My out would be here, somewhere here. It goes up and comes down under here. I'll get out. All right, that means there's something going on, and I don't want to hold through something going on. But anyway, this isn't a speculative one, but this is one. If you are holding healthcare and you want to be on the advanced technical side of it, you want to own this company. Hospitals need to become more efficient, or healthcare but system needs to become more efficient. Where we can put in a machine to do something a human can do and free up the humans for the other things, that'd be great. Next one is MYGN. This one, I don't know what to say. I'm not going to spend a lot of time looking, but if you look at one point, it got bid up after COVID to 63. It's now down at 3. Looks like a bottom. It could double bottom. All right, you've got a bottom here. Might come all the way back down here. Put in a double bottom. It might just stay at this low here. I don't know. This one is completely like a junior mining stock or something. You're just buying at a cheap price, hoping it'll go up. I'm not something I'm looking at right now. A lot of things would have to change. Need to get on the other side of this. You have to stay above this red, which is resistance right now. We want to make that support. We want to get on the other side of this to make this downtrend support. This is a falling knife, basically. Don't catch it. Be on the other side of it. Once again, we'd have to get above the 200 daily, which means getting out here somewhere. So in an ideal world, you come out, break out, retest somewhere. That's going to get under here. That's what I buy. And same thing with the weekly. I want to see that same process, come out, retest, take off, and I want this white guy to get underneath too. So, yeah, that's about it. This one is not something to jump at for me, but once again, it's only got so much more down it can go, and if it is going to shoot back up, even to get up to these tops or somewhere near wherever this resistance trend line is, that's a nice move. Can't guarantee it's going to happen, but there is a lot to gain there. And once again, just put your stop loss. Where are we here? Whatever this lowest point is here. All right. Breaches that. You can get out. You can even make it the long-term red support line. All right. Don't let this one get away from you if you do step in. Keep a tighter stop loss. It's a complete lottery ticket. This one, it's kind of the same thing. However, it's showing a little more got a little more life to it, and it's not as sclerotic. Here's your falling knife. Don't catch falling knife. There it is, that whole downtrend. We're on the other side of it. We've broken it. Looks to be turning around. Look at the volume coming in. The buyers are coming in. Somebody's coming in saying this is now cheap. At one point, somebody thought it was worth $205 a share, and somebody gapped it up here a whole lot from 89 to 125. So there's something there, just overvalued, selling, people wanting in on other things. Buyers are coming back here. And if you look, our white line, we're kind of that. When this starts to go straight, when your moving averages straighten out and they're not going up or down, that's a good sign that something's it's going to go up or down. Sideways doesn't really exist in this world very much. Huge gap to fill here. So you can play just on the gap fill from 14 to 24. I want to be on the other side of this red line. Once again, the same old story. Breakout, retest, resume, right? Where would I put my stop? Screen, if we got below it, support here, or this diagonal support, if we're to break that. Simple. I want to see this come out and break that out. See, once again, here's our 200 daily, which I want to be above, and here we are. Something's getting ready to have this kind of, a lot of energy being built up here. This is going somewhere. Up or down, don't know, but it looks to me favorably to the upside. All right, it's gotten as low as it's going to go. And what could happen, once again, market conditions, not so much. The stock could get another bottom down here. Just put in a double bottom, which is quite common. And so you want your stop loss, so you're not riding it all the way back down to 5 and hoping it recovers. It's just that's opportunity cost. Your money could be elsewhere doing something. So once again, these kind of plays, small bits of money, small bits of money, but if they do pay off, once again, somewhere down the road here, and it makes it back up. In the early 2030s, you go from 14 to 200. That's not a bad annualized rate of return. Another one, same exact kind of thing. It was worth this. It got down to here. Volume came in. Buyers stepped in. And you've got a consolidation pattern forming. What do I want to see? Once again, breakout, retest, resumption. Get above my 34 weekly. Same thing, get above this 200 moot daily. I want to see that. Just have something going for it. Sorry. Once again, I don't know what this thing does, but at one point it was $22 stock. It's now $3. Could, over the next 4 years, make it back up there? Sure. Why not? Just more reading. Find out what these companies are all about. See, the institutions are saying there's something going on because they're buying. Now here's the one I am going to definitely take a shot at. I've read a little bit about the company. I know a bit about what they do. I know sort of what the news is going forward for them and where they're looking at things. What they've got coming up. There's some good things happening with them. I'll let you do your own research. I don't like talking about that. But from a technical perspective, same thing. It was kind of cruising around in here. Yay, COVID. Got bid up to 212. Came down. See this? Right now we're above it, so it's support. You can see it's a bouncing place. It's a takeoff place. All right, there's something going on there, so that is definitely support. Now, in this bottoming pattern, which this is, right? It's not going down anymore from here. It's going sideways. One hump, shoulder, head, shoulder. You got an inverted head and shoulder, and you've got the breakout confirmation. Now, the measured move, which is always from the head to the neckline, is to there. Not sure it's going to do that completely. It could because of what the company actually does. But I definitely think it can make it back up to the 212 range. Will it go there tomorrow? Nope. It looks to me, this white channel seems to be obeying that, hitting it. A little breakout here, but we're back in the channel. So if I extrapolate that forward, just run down the middle of the channel up to here, means somewhere by 2029 or so. we're back at that high. This one I like. So this one I am going to take a shot at. Not sure when, next week, the week after. I might wait till after Option X in this month, June option. Was it third Thursday of the month? I'll have to look at my calendar, but I might wait. I might buy a little bit and then buy a little bit more. But I definitely, this setup is great. The downtrend is over. There's your falling knife. You've got a bottoming pattern, defined inverted head and shoulders. Where I would set my stop loss, I wouldn't want to get outside this white line again for too long. I know it did here, but if it does it again, if you get multiple breakouts, that's a bit of a sign of weakness. The other place you can always do is take your neckline, which would be what, $60, come down a bit, maybe 5 or 10%. The algos are going to trigger. They will know this neckline as well, so they'll be manipulating it here. So you want to be your stop losses below or above where the algos are, or you get stopped out and then it takes off again. Another good place might be either here or here, right there, or there for your stop loss. But once again, if you're going to hit these lines, you're coming out of that anyway, so it doesn't really matter. Yeah, just this trend, this white channel, let it follow the channel. When it stops obeying the channel, get out. This one, out of all of these, not so much Intuitive Surgical or CRSP, so to speak, just the name brand for CRSP, I think helps it a lot. But this is the one for me that, out of all these setups, that I like the most. Let me just try something. I just want to see XLV. So yeah, this is a ratio of twist. If it's going up, it's we're comparing twist to the whole healthcare sector. So is this company, Twist, is this stock chart outperforming the healthcare sector? If it's going up, it is. Right, and you can even see same kind of thing here. It's broken out. So a lot of good things going on for that. I want to show one more thing here. Yeah, so the derivative oscillator is saying this is not, so this is not oversold by any means at this point now. This was oversold down here. Saying as buyers. Now this just means that there are buyers. It's not overbought, it's not underbought, but there are more buyers than there are sellers right now. So I like that. I wish in a perfect world we were here, right? We're at the bottom of the sentiment, but we're not. And it's just what it is. And because, once again, this is a long-term play, I'm not too worried about what a monthly derivative oscillator is saying right now. So there you have it, some medical companies to look at. Once again, Twist is one I'm definitely going to take a speculative shot at. CRSP and ISRG, Intuitive Surgical, it'll be a speculative shot, but it will be with a little more confidence because these are money makers. All right, hope that worked for you. Send me an email if you got anything you want me to check out. Happy to look at it for you. If you find this technical analysis dive is too simple for you, just say so, and I'll go deeper and mark it up, make it look like a math project for you if that's what you want. I don't like that. I want simplicity. I want simple lines that make sense, and I need to keep it simple. If you want more, I'll give you more. Anyways, my contact information is down below. Check it out. Send me a note. See ya.